Morning, ladies and gentlemen. This is Greg Michaelowski, and this is Thursday, April 8th, 2010, New York opening Forex commentary, brought to you by FXDD. Well, it's 7:02 currently at the moment, and the Bank of England just came out and announced that they're keep their rates unchanged at 0.5%. This was as expected. They also kept their bond asset purchase target at 200 billion. This is as expected, and so there's not really any change there as far as the interest rate decision overnight. They did have some much better than expected data coming out of the UK. Industrial production rose by 1% versus expectations of plus 0.5. Manufacturing production rose by 1.3% versus estimates of 0.6. So that was good news coming out of the UK today. And the rate decision today was warranted. I think the next thing that they have is the election coming up, and so next month, and that will be dominate the landscape. Now, in the UK or in the Eurozone, what it has continued to happen in that uh, um, for that currency and for that zone is the Greek bond situation continues to get worse. The yield on the bond has risen up to about 7.447%. The spread to the German Bund has also increased to well over 4% as well. All these are at record levels for those that spread, and this is all contributing to some weakness in the euro against the dollar, against the pound sterling. So why don't we go in and take a look at the charts? We'll start off with the pound sterling and see how that's reacting here after the announcement. You can see here that the pound had another one of these volatile days here on the 5-minute chart. The market went down and went up here today, retracing the entire move to the upside over the last 5 minutes after the rate decision. The pound continued its move, squeezed to the upside, I guess, and it's currently trading at 152.17 below the 152.19 200 bar moving average. So time will tell whether this move to the upside was just another one of those last minute squeezes to the squeezes as the market continues to be caught getting short the pound and then long the pound on the rebound. We did get that better economic data, so that justified the move to the upside here today. You can see now here that the pound is coming off. Taking a look at the hourly chart in the pound, this is what we're faced with here on a daily basis this week. This is Thursday, Wednesday, Tuesday, Monday. So the week started with the market gapping higher, went to the high for the week on Monday. Since that time, we've had this volatile boom, 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 boom type range that has dominated the landscape here. You can see here another reason why the market has sold off at that highs was the market came up to the 100 bar moving average on the hourly chart here earlier today, and then prompted the move to the downside. Actually, in this last move to the upside, came right up to the 100 hour moving average, and found sellers against that level, profit takers against that level. So we'll continue to watch this 100 hour moving average on the top side. You notice that we've been staying below it for the entire day here. That is a somewhat negative for the pound sterling, but in this type of action here, I'll discount that fact that over the time that the market's been doing this up and down, up and down, up and down, the 200 bar hour moving averages started to move up here. We did dip below it here in a fast type motion to the downside, came down to where yesterday's lows were, where this trend line is. The lows came in yesterday at 151.63. The low here today came in at 151. Well, this is 151.40, and the low here came in at 151.37. So we got within 3 pips of the low, and then the market got the better data and started to move back up, back to the upside. So pound sterling, we'd be looking for support down here at the 152 level. That's the 38.2% retracement of the week's trading range, and we're going to keep these Fibonacci's in here for this currency pair, and also pay attention to maybe the 50% retracement of that currency pair. Let's go to actually the euro sterling, and we can see how that is been in a trend to the downside here this week in a channel type move. This is actually about 2 weeks of data here in this channel move. We do have support down here at the bottom end of the channel. Can't see where that comes in around the 87.24 level. We'll be watching that level on the downside. Should the euro sterling continue to have pressure to the downside for that currency pair, but the story this week has been Greek, and that's caused the euro to go down, and the sterling has had the much better data, and so we're seeing the euro sterling get hit. Speaking of the euro, let's go to the hourly chart of the euro versus the US dollar. And this currency pair has again suffered here today. Market came down, made new lows here for this move to the downside, reaching a low of 132.82 here. We have three different bars across the low there, and if you recall, we are looking for support down at the 132.67 level. That's the line that we have in here. Also, this low here at 132.82 coming back to March 25th is a key level as well. So we do have additional support down at that 132.67 level. We'll be watching that closely down below. If we do get below that level, then look for the market to move down toward the bottom end of this channel here off the euro dollar chart, which comes in way down here at 137.37 for that currency pair. Taking a look at the 5-minute chart, see if there's any clues as far as that goes. We are back up testing the 100 bar moving average and the 200 bar moving average. You can see how the market has respected mainly the 200 bar moving average over the whole course of the day. We did have a couple of these breaks to the upside, but they failed, and when they fail in this European session, especially when toward the opening, you often get this move back to the downside, come back, test the moving average, and then continuation to the downside for that currency pair. The slope of the line's moving down, market moves higher, can't get up, and then starts to move to the downside. So we'll be watching this 200 bar moving average at 133.27. We have the top end of this channel here, which goes, this extends back pretty good ways here, which also comes in at the 133.31 level as our topside resistance. Get through this or stay below this 100 bar moving average here, stay below these lows here from earlier in the day, and we should see another move to the downside for the euro versus US dollar if again this 100 bar moving average can hold, if we can stay below this 132.33.14 level in that currency pair. Let's move on over to the dollar versus yen. Take a look at that chart, and we had drawn in this 92.86 level as a support level and a target level on the downside, and we commented how that was these lows back down here, which comes from March 31st. We had 1, 2, 3 lows there, and then the market took off to the upside from this base, this nice base right there. Oops, didn't mean to do that. So let's move over to where we go to today, and we come down, we test that 192.86 area, and then the market moves down to a low of 92.82, and then it has stabilized here in the last 3 hours near that level. Now we're currently only trading at 92.90, so it's not like we're getting a huge bounce off that level, but we are slowing down there as we see profit takers come into the market. We'll continue to watch that level as we head into the New York session here today. A break below that level should see further pressure to the downside. Speaking of the 200 bar moving average here, the dollar yen had a similar type of action here. We had good support at the 93.12 level. I'm going to remind everybody what that is. If the 2009 high to the 2009 low, the 50% retracement comes in at 93.12. So we knew that was a key support level coming into today's trading. We also knew off of the hourly chart, if you take the low from here and the high from this point right here, the 61.8% came in at 93.13, and that's where we have held support yesterday, held support again today, held it, and then broke it, and that has led to the downside. You can see here on the 5-minute chart, held, had buyers against it, broke through it here, could only get above the 15 level. This was a little tricky here, folks, I must admit. We went back up to a high of 21 here. Still below the 100 bar moving average, still not 10 or 15 pips above where the sell level should have been, but then the market finally gave up and came down to the new lows. So we are at support at that 86 or 87 type area. We do have resistance up at the 12 level where the 100 bar moving average currently is at the moment. So we'll be watching that currency pair very, very close. We'll also be watching the dollar Canada here as it continued to move higher here, finding support against the 100-hour moving average here, moving up toward the 200-hour moving average. We've been below the 200 moving average since this point right here at 101.91. Yesterday we broke above the 100-hour moving average and we stayed above that level. So this 200 bar moving average comes in at 101.03. We'll be watching that on the top side. Currently market trading at par 76. And on the downside, we'll be watching the 60 level. The 60 level was the low going back to this date right here. This is the old low for 2010 until the market broke down below that level this last week. So we've been watching the par 60 as support. If we get through 60, we're looking for further moves to the downside for that currency pair. Aussie versus the US dollar came down, tested the 100 bar moving hour moving average after breaking through 92.51. We got to get through 92.51. What's 92.51? That's this high right here, the March high. If we get above that 92.51, still the target on the top side is this high in January. This is a 2010 high for that currency pair that currently comes in at 93.28. This is Greg Mikulowski from FXDD.